this is a great time to be adding to a position that you have because these stocks are trading at levels that you don't typically see these stocks at.
The June CPI report was just released, and it's something we haven't seen in a while, a decline in consumer prices. We're going to talk about how this might affect your favorite stocks and, of course, all the latest CPI news and its market moves. Let's dive in. It's the announcement that always gets a reaction on the market. The latest consumer price index was just announced. We have Chris and Thomas here to give us the details. Guys, what is the latest CPI news?
Right. I think the CPI news was good. It came in cooler than expected at the core and headline, month to month and year over year. This data really aligns with the expectation for the FOMC to lower interest rates later this year. I think it's a bullish news for the market.
Mm-hmm.
Now, we've seen a lot of the market react to these types of CPI announcements over the past few years, especially. Why is that exactly?
Well, I would my initial reaction is because investors are a lot like sports fans than they would care to admit. I mean, this is Monday morning quarterbacking, where it's easy to overreact to a single data point as evidence of a trend that may or may not be there. What I mean by that is we're all consumers and we get caught up in how much the price of something is this month versus last month and how much it's going to cost us to put gas in our car or put food on our tables. And the bad news is that prices generally only go in one direction, and that's higher. But hopefully what you usually like to see is that the economy is growing fast enough to keep up with those price changes. I'm old enough to remember the 1980s. And the reason why we really beat inflation in the 1980s was because the economy just grew at such a fast rate that we just grew our way past inflation. The latest read on GDP, the final read actually that came out just about a week or so ago, came in at 1.4%. That's growth, but that's not going to be growth that's going to be enough to make a difference with the CPI in terms of getting it down to the Fed's target when they would like to get it there.
Now, which of these industries kind of tend to have the biggest reaction to these types of announcements?
Well, as far as the high interest rates and high inflation go, it's utilities and real estate have a lot of response to them because they're really tied to the cost of money. When it's expensive to borrow money, the utilities have a hard time investing. And then on the real estate side, the consumers have a hard time spending money to buy new houses.
Yeah, energy stocks come to mind because it impacts so many other areas of the economy. Plus, you know, when you have higher inflation, higher interest rates, it's going to be more expensive for them to get the actual oil and such out of the ground. That becomes less of an issue when you have a lower interest rate environment.
Right. Financials are another big industry that gets hit by interest rates. The higher the interest rates are, the wider their margins. So as it is right now, we're kind of looking towards a declining rate environment. So that's going to have an impact on the outlook for earnings for the financials.
Now, Thomas, I think you mentioned something here with the CPI as kind of a melt up and how people are reacting. Can you tell us a little bit more about that? Is there fear for the meltdown then? When does that happen?
Well, right. So that comment came out earlier, you know, when the first initial market reaction, the market surged higher. And so this CPI data is better than expected. And for a market that was kind of expecting things to not be as good as they were, that could lead it higher. But looking at the market now, it seems to be a sell the news event, and that is a little bit concerning. However, because the earnings outlook is still pretty positive, I think whatever dip or correction that comes in the S&P 500 now is going to be a buy the dip opportunity.
Well, we want to get into these specific stocks that you can maybe buy on the dip here in just a moment. But here is a tool that everyone can use to track CPI impacts and all market movements. Let's take a look. Want to keep your finger on the pulse of the market? Text the word YouTube to 68285. That's 68285 and get free breaking news alerts from MarketBeat for the stocks that matter most to you. Don't miss out on crucial updates. Stay informed and stay ahead. All right, guys, so we talked about quite a few industries that tend to react to this news about CPI. Let's get into the specific stocks now. What are some of the companies that we're seeing make the biggest reactions today to this news?
One of the things that I was looking at, Lacey, was looking at some of the stocks that have been, objectively oversold lately. And so I went on MarketBeat's tool that for the biggest gaining stocks, and I sorted it for just to look at just large cap stocks. And one of the names that popped up at the top was Enphase Energy, and that's a logical choice based on what we were just talking about with energy stocks. This has been a stock that's been beaten down for quite a while. This would be a stock that I would be thinking investors, especially traders, would want to be getting in on if there's anticipation that rates are going to be cut anytime soon.
Right. I'm looking at the tech sector right now. It's making amongst one of the biggest declines as a whole today. NVIDIA specifically is down pretty hard. I just checked that one out. It's down almost 4%. So this is making it look even more like a sell the news event than I might have previously said before. But again, the outlook for earnings is pretty robust, even for NVIDIA, especially for NVIDIA. It's leading the entire market higher right now over the long term. So it's definitely a buy the dip event.
Thomas, tell us a little bit more about this sell the news type of event you're talking about. Just how big of reactions can some of these stocks have to these kinds of announcements?
Well, it kind of depends on what the announcement is. But in this case, the market has really been expecting interest rates to come down, and this inflation news aligns with that expectation. So it seems like the market is just kind of cooling off a little bit. The data definitely aligns with the outlook, but it really wasn't enough to spur the market to a new high.
Now, for the investors that might be looking for some stock options that are a little less reactionary to the ever-changing CPI announcements, are there any specific stocks that are less likely to see big reactions to consumer spending that they can look towards?
Well, right. So prepping for this video, I did a little screen using MarketBeat's tools. I screened for low beta, high yield, moderate buy rated stocks, and it came up with a pretty nice list of names that I could easily recommend. Includes AbbVie, Coca-Cola, PepsiCo, Shell, McDonald's, and Verizon. They all tend to react less violently than the S&P 500. They've all got an outlook for growth. They all produce strong cash flow. They return capital to shareholders, and the analysts are all supporting them. So in the event that they were to have a price correction, and I think some of these names like McDonald's and PepsiCo and Coca-Cola are all trading at long-term lows, this is absolutely a good time to be looking at these stocks, if not just going out to buy them.
Chris, are there any stocks that Thomas just mentioned that you'd particularly lean towards?
I would lean towards McDonald's because I think that there's a technology story there that's usually overlooked with that when it comes to that stock. I would also be looking at Pepsi really hard right now. Those are two names, and I agree with what Thomas is saying. If you're a long-term investor, this is a great time to be adding to a position that you have because these stocks are trading at levels that you don't typically see these stocks at.
Thomas brought up some great consumer names. What other types of companies are you looking at?
Well, if you're looking for stocks that you might be saying you're riding the trend higher on, two names that I would be looking at right now are Costco and Walmart. One reason is the same for both of them, and the other reason is a little bit different. The reason that's the same is because right now consumers have to be putting their money somewhere, and that's going to be likely to be in feeding their families, that they've got to eat. And these are places that clearly the revenue and the earnings have been showing that consumers are still willing to spend their money at these locations. So that's the common reason between the two. Where I see a little bit of a unique case for each one is in the case of Costco, there was just the announcement they were going to be increasing their membership fee. This has been something that's been kind of an open secret for a long time. The CEO kind of even said, we're going to do it, but I'm not telling you when. Well, now they are. The thing is that they have over a 90% retention with their subscribers. So most likely people are not going to balk at paying the extra for the membership fee. And that goes right to the company's bottom line. So that's a good reason to be looking at Costco right now. With Walmart, they recently made an announcement where they're going to be opening up 5 automated distribution centers. Now, everybody hears about automation and it's really cool with AI and such, but Walmart's not just doing this because it's the cool thing to do. They're doing it because there's rising labor costs right now. This is a way for Walmart to do that. That's not necessarily good news for the labor force, but it's really good news if you're a Walmart shareholder, because again, this is something that's going to be benefiting the company on the bottom line.
Right. I like that Costco pick for the membership fees. going straight to the bottom line. It will help them build their cash position and help usher in that next special dividend a little bit quicker.
All right, guys. Well, thank you so much for sharing some of these options for investors. We are going to continue to monitor the impact of the CPI news right here at MarketBeat. But for now, happy investing.